Good morning, everybody. It is May 3rd. It's 8:30 in the morning. I just want to go over the S&P 500. There is a potential setup today, but it's a borderline call. Um, I'll explain my reasoning here, but in short, this sentiment trade strategy that I use, it is very accurate, has a high percentage of winning trades, but during a market trend shift, the losing trade is substantially larger than the winning trade. So if the market does shift and go against us, because we do have a possible entry buy signal for the S&P this morning, if the market does roll over and continue the selling, it will most likely give us a 2 to 5.5% loss, and that's it's quite a substantial loss. But that's the way the strategy works. It's very powerful and profitable in the long run, but during a trend shift, on market tops specifically, it can have quite a substantial drawdown for that one trade. So let me just kind of run through what I'm looking at. The past few days here, we've had overbought conditions and then a sell down, and I'm just going to show you kind of what there's be some bullish and bearish patterns are. This sell down here was pretty much straight down, and then we saw this continued push on an angle down, which is, believe it or not, that's a very bullish sign. When it continues to push like that, it's pretty bullish, and when it snaps back, you're going to get quite a bounce. And what we're getting over here, we had a similar. This one sold down, and it was actually a much more oversold condition. Had a small bounce and went back down, to pretty much flush out the last remaining people breaking the low. It was a little bit different of a type of pattern, but it was also a much larger sell-off, so it was definitely more oversold, which is why we got in and played that. But right now we've seen the S&P move down, and it's kind of doing this. It's almost like a bear flag, and a bear flag is usually post the halfway mark of a move. And I'd like this better if it was trending down like that and pushing, and then it quickly would snap up, but that's not what we're looking at. I have a feeling this could be a similar move and bring us down to the 1165 area, which is going to be more or less a support level from previous. Could bring us down to the 1170, who knows. But that's what is my concern, is the pattern is very bearish still. We do have a buy signal here saying that prices should bounce, but the charts are kind of telling me the opposite right now. And everybody over the weekend looking at the daily chart is probably saying, I'm going to bail out on Monday morning. So I think we could see a down thrust and a move down. And of course, if we do get a larger push down and the market goes into an extreme oversold, then we might actually buy a position and try and catch a small bounce, which could be a bounce up into this area, which will be a resistance. So that's kind of what I'm looking at. I don't know if we're going to go long today or not. I need to see more of the market unfold. But that's what I'm seeing for the S&P. So that was the 60-minute chart. Now I just want to jump to the daily chart. Pretty much, as I mentioned on the weekend report, this is looking much like the top we had in January. It's just a little larger. And of course, in January I did have a buy signal this day here, similar to what I'm getting right now with this signal, except for everything seems to be rolling over. And if we do get this follow through day and a couple days of selling, it's going to put us into an oversold condition, but which will put the S&P probably down somewhere over here, or possibly down to 1125, which is a substantial drop. So what I'm trying to avoid is this large sell-off. I don't mind seeing. I'd rather see the S&P continue higher, and then on the tiny oversold pullback, we simply go long. But because where the market's trading right now, it's on the edge of having a big losing trade. So I'll just show you just the past performance, more or less. Here's the January top. I got to play a couple of these plays, and then we had the breakdown. I had a buy signal here, and then the next day it broke down, and we don't actually put our stop in until the following day is set, and then the day after that is if our stop gets breached, that's when we get out. And so this is a trade that I'm trying to avoid. It's a it's about a 5% loss, which we could take now if we do the trade on the S&P, and it's because it's a shift of trends from an uptrend to a downtrend. You have one kind of bad trade during that time. And then of course once the trend is shifted down, we'll actually look for oversold conditions and small bounces that will actually be shorting and covering on lower prices, and then these larger arrows are swing trades, and we'll probably get like a larger swing trade if everything kind of happens as before, and we'll get a nice down thrust, and eventually everything will be completely washed out. This gray line up here, this is like extreme panic selling in the NYSE. It's 35 sell orders for every buy order, which is just insane, and that pretty much pinned the bottom. And usually that happens a day before the market bottoms. You'll have a little follow through the next day, and then you'll see the trend shift. Picking bottoms is much easier than tops, and that's why I'm trying to tiptoe us through this top here, if it is a top, because we could take a nasty loss just like over here, which is about a 5%. And that's why I'm saying to take a small position, because I'm waiting just for the market to crack and start a new trend, and then we'll flip our strategy. We'll be focusing more on shorts until we get panic selling, and then we'll focus on going long again on weakness. So that's what I'm thinking. That's kind of the plan. Today is an iffy day. I'm not sure if I want to go long or not, because it's not a perfect setup. Everything isn't in line, but it's very close. And that's pretty much how I feel. I don't think I'm going to do anything today. So just play it by ear. Anyways, I'll talk to you guys in the chat room. Bye bye.